Welcome to Modern Traders. I'm Ben. I'll be your host. Before we get started, I want to invite you over to the free Discord. We're going to do a daily watch list, call outs, free resources, news catalysts, FDA approvals, what have you. And we put a lot of work into trying to get some good info out there for you. So if you get anything out of it, please remember to like and subscribe. Give us a little love with the YouTube algo. Alright, so today we got to discuss what's become a pretty sensitive and sore subject, but we need to talk about it nonetheless. That is Robinhood, and more specifically HOOD, the ticker symbol for Robinhood in the stock. Now, Robinhood, as most of you will know, is a fee-free brokerage. They're actually the ones that pioneered the concept of fee-free brokerages, that giving access to IPOs and things like that, fractional sharing, and like I said, fee-free trading to retail investors for the first time. And, giving credence to the name Robinhood, stealing from the rich hedge fund guys and giving to the poor retail investors like us. And they had gotten a bad rap just recently, but overall they have still stuck with their core idea of providing a very user-friendly service with no hidden fees. Their standard stocks and funds, options trading, crypto, and then they have other means of producing income. But one of the more important ones I wanted to talk about that a lot of people don't understand is that it does actually essentially function as a bank account, just a checking account. You can use it to cash your bills, direct deposit. You get an ATM access with a debit card directly to your funds. 75,000 plus free ATMs used. And what people also don't seem to understand is that the money that you have sitting in this account, unlike a checking account, is paying you 0.3% interest, which is way above anything a bank's going to give you for money that's just sitting in an account, which doubles as easy access to cash that you want to trade with directly to the brokerage. And while it's just sitting there being unused, you're still getting paid for it. So it's a no-brainer to use it, even if you're not going to use it to trade. And another cool feature is that while a bank will protect your assets and your funds for up to $250,000 insured, because Robinhood's system uses a system of banks, several of them, that are able to offer you up to 1.25 million in protection, over 5 times as much as you would get from a traditional bank. So in pretty much every way, it's going to be superior to a banking account. If that's the only thing you used it for, it would be worth getting into. And they're making money and profiting off of every aspect of that, while they're saving you money and making you money at the same time. And as far as their income is concerned, there's several ways they do it. There's the Robinhood Gold system, in which they provide access to some a little bit of resources, not anything great, anything impressive, but they get $5 a month from that, from 20 million plus users. The stock loan program, like any other brokerage, they're going to get a percentage of that. They're going to charge you an interest fee for the money that you borrow into your margin account. And the cash management, of course, going back to that, the network of ATM machines, the network of the Sutton management systems, and they're going to get a percentage of everything. And that percentage that you get in interest on the money you have sitting, of course, they're going to get a kickback from that as well. But the most important one is the cash for order flow, in which they get incentives from the big hedge funds and the institutional investors to give you preferential treatment on where they direct the orders from their retail investors. And because the payment for order flow is such a massive part of their income, the spotlight's been on them, and we have seen quite a bit of pullback due to recent news from the SEC talking about a potential ban on payment for order flow. But in my opinion, this is just talk. It's just a publicity stunt, and there's no way in God's green earth that we'll ever see payment for order flow cease to exist. It's just something that gets the big guys the way to keep the playing field tilted in their advantage, and it's not going to go away anytime soon. You can always count on greed to win over. So, in my opinion, this is going to blow over, and it's going to be something that leads to quite a bit of rebound in Robinhood in the near future. And we do see quite a bit of negative news. We have say them pay one of the highest fees in regulatory history because of accusations of misleading customers and doing other unscrupulous activities that the SEC frowns upon, and took the opportunity to get a whole bunch of money out of them. We have seen a little bit of competition from PayPal moving into stock trading recently, as well as Square, and it's going to take away from their potential profiting income off their cryptos. And of course, we had to see their reputation damaged almost irreparably by the fact that they turned their back on the retail investors in general during the entire GameStop AMC fiasco, where the retail investors were able to make massive returns for the first time in history, but Robinhood was quick to cut them off. And recently, we have seen news that they're trying to rehab their image. They are acquiring Say Technologies, which essentially is a company that provides retail investors access to the to the earnings reports, so the more sensitive information that typically only the richer and institutionally involved investors would have access to. So Robinhood's trying to rehab their image with this acquisition, that they are still for the people, and I anticipate that it will go a long way toward that. And of course, we're seeing them being elevated to meme stock status, which goes to the old term that no publicity is bad publicity. In my opinion, no matter how many original investors they alienate from the system, they're going to gain many more just from the publicity that is provided to them. And you got to keep in mind that bottom line, this is a $40 billion company with thousands of employees, a worldwide footprint, recognition through everyone. It's not even in the financial sphere. And with so many revenue streams and potential profit makers, I just don't anticipate this not going up in the short term. If we take a look at the financials, we can see a little bit of a red flag here and there. You can see that the cash flow was negative for the last couple quarters back, and then actually jumped substantially from negative 1.8 million up to 2.2 of quarter over quarter. And then we see that the debt issuance has gone up, but more importantly, we see that the revenue is quarter over quarter. We see 250,000 to 500,000, 586,000, but we also see that they are not turning a profit whatsoever. We're negative in the millions on a quarter over quarter, which is a bit of a concern considering how much profit and how much potential there is here. And with their propensity for a constant stream of bad news catalysts, alienating their customers, and potential for scandals that we haven't even heard about yet, I don't really feel comfortable recommending this as a long-term investment or something I would take as an investment for myself just yet. But I do think that with the amount of meme stock attention and the likelihood of this SEC nonsense to blow over in the near future, that this dip will be bought up quite a bit, and we'll see quite a bit of pump, maybe right back up to that $60 to $80 level. But taking a quick look at the graph, you can see that initial massive run-up of over 100, close to 200% just right after IPO, and then a quick cool-off immediately afterward, and then a steady cool-off ever since. And we see that find a bottom just not too long ago, about a week or so back. We see a double bottom just off that $42 support level, and it's just recently in the last couple trading days managed to overtake the $44 resistance and has backtested that as support. And we did see quite a bit of strength going into today as people starting to have the panic sell effect wear off, and now they're starting to get that FOMO effect kick in. So I do anticipate seeing this run up quite a bit, and with that meme stock status and enough intention, it could easily be 100, 200, 300% runner, guys. But definitely something to have on your radar, something to consider past the headlines and the articles, and more to what it can do for you as an investor and as a trader. But till next time, I'm Ben, Modern Traders. Thanks for stopping by.